There are a lot of real estate bears out there these days. On our end, we agree that real estate prices are likely going to take a plunge, but we don't expect prices to stay low for a long period of time in the Toronto investment property markets. In another video, we showed the similarities between today's market compared to 2017. What we found was the most resilient market were condos, which didn't drop as much and were the quickest to recover, and this is largely because of its big investor base. Now, if you dive into the freehold investment pockets in Toronto, you'll also see that these properties rebounded much faster than the broad Toronto real estate market. Buying at the lows is great. I mean, who doesn't want to catch the lows? But instead of timing the market, most of the real estate investors who are buying these days are choosing to buy because of real estate's superior long-term performance. And more specifically, they're choosing Toronto because they believe in Toronto's greater growth prospects, which is really what makes Toronto stand out. I mean, it's definitely possible to get better cash flows in other parts of Canada, but when you look at total returns, you'll find that the best real estate returns come from areas with the best growth. So most of our investors aren't trying to catch the highest cash flows, but rather focus on the best growth and returns. And in many cases, they're fine as long as property's cash flow neutral at least. Of course, with rising interest rates and everything else remaining the same, cash flows will be compressed. In other words, prices that can cash flow neutral today might dip negative in the future, and this is what our investors are concerned about. So in this video, let's take a closer look to see how things would look like in 3 different scenarios. Number 1, what do prices need to be for a starter freehold investment property in Toronto to cash flow neutral today? Number 2, how much would prices need to drop if rates rise by the market consensus of 3.4% or higher at the worst case scenario of 4.3% by year end of 2023? And finally, number 3, one thing that newer investors don't realize is that rents are also changing for the better. Rents have dropped and stayed low for a couple of years now, and right now, forecasters are expecting a rosier picture for rents. So we'll also take a look to see how prices might move up when rents rise and soften the impact of higher interest rates. Before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so that you can see more videos like this made specifically for real estate investors in Toronto. Right now, in today's Toronto market, starting price freeholds can go for around $1.1 million. So if you want this property to cash flow neutral at our current interest rate of 2.4%, then you need a total monthly rent of $4,300, typically coming from 2 separate units in the house. Interest rates are rising, and this is the main factor that is going to compress real estate prices because mortgage payments will be higher. By year end of 2023, the market expects variable rates to go to 3.4%. If nothing else changes, that $1.1 million property will cash flow negative at $430. I already mentioned that many investors aren't comfortable with this. So what would happen if rents don't change is that the buyers would need prices to come down so that these properties can cash flow neutral again. And when you do this, you'll see that prices will need to come down by 11%. We can also test the worst case scenario where rates go up to 4.3%, which is the most pessimistic forecast so far. If that happens, prices would have to drop 19% to stay cash flow neutral. Of course, markets are not always entirely rational. Even if you're a numbers-based investor, there is a high chance that you might deal with a seller who is more emotional or other buyers who are more fearful. When that happens, you might be able to get more discounts than 11% or even 19%. Last time in 2017, semis dropped by 21% and detached properties dropped by 25%. So it's definitely possible to see bigger drops this time around too. But what we found was that prices didn't stay that way for very long. You would see prices dip over a 3-month period and then start retracing upwards again in the Toronto investment pockets. So last time around, there was just a narrow window where you could have gotten the best selection of properties and the best discounts out there. Now, our assumption here is that nothing else changes except for rising interest rates, which might not be the case. Historically, rents do rise as inflation rises, and because rents have been depressed for over 2 years now in Toronto, rent forecasters are expecting Toronto rents to go up this year by 11%. In Q1 of 2022, rents have gone up by 3% so far, so there's still an 8% room for rents to go up if these predictions pan out. The good news is rents are a good buffer for rising interest rates, and this is the main reason why investment-type properties drop less and rebound more quickly in rising rate situations. If rents rise by half of what's predicted at 4%, then prices can rebound by 5% upwards. If rents rise by the full 8%, then prices can come back up by 10%. And just another note, these rent forecasts are just for 2022, and rents might continue to go up in 2023 as well. If that happens, then we can see even more room for investment property prices to grow. There's definitely a lot of real estate bears out there, but there are some bulls out there too. For example, CREA projects that prices might go up by 23% year over year by December 2022. So far, we've gone up 13% since December, which means they expect another 10% price growth from here on. That seems too optimistic to us, and honestly, we think it'll take a while before prices rebound back to the peak of this year alone, because we're expecting prices to drop from this point on. But what we think is that if we see those 20% price drops from here on, then at that point, we'd consider those really amazing deals. As rents continue to rise, investment property prices usually follow, which means there is a good chance that you'll be in for some pretty good short-term gains at that point. If you're thinking about buying an investment property in Toronto and want to learn more, let's chat. We can talk more about what our thoughts are, what might be right for you, help you prepare for your purchase, and then match you up with the best investment property that fits your needs. After we help you buy it, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.